All right. You're welcome. So I'm currently on Euro USD, this Euro USD daily time frame. If you notice, the Euro USD is currently bullish. The trend of the market is bullish. Good evening. You notice the trend of the market is bullish. It's giving us a break of structures at this particular zone. Price is giving us a break of structures to the upside. So price came all the way to this particular zones, and then what happened? Price gave us a break, and then came back again, telling us that price is likely to continue around this particular zones for the sellers on Euro USD, because right now I'm currently seeing price to approach to this particular zones on daily time frame. So still looking on Euro USD to drop back to this zone on daily time frame. But before price will start dropping, it will have to do what? Retrace, make a retracement. So it can make a retracement all the way to this particular highs before there will be any drop. But I'll have to drop down to 4 hours time frame, this 4 hours time frame, to see the price, what the price is doing. So now I'm currently on the 4 hours time frame. You notice price keep giving us a selling opportunity, dropping down, keep giving us a selling opportunity, telling us that the sellers are still in the market, breaking structures. And you notice price came all the way to this particular zone. So what happened? Price refused to break this low. Price refused to break this low, giving us an equal low. So price gave us an equal low, breaking out of this high, giving us a push to the upside that price is trying to make a shift. The price is trying to make a shift to the upside. So where will you join price if price eventually make a shift. What you have to do is to pay attention to this candlestick that is printed here. So if price is able to come back into the zone, if price is able to come back into the zone, and you figure out price respecting the zone and giving you a rejections, watch out what price is doing. Come back into the zone again, give you a rejections, then you know that price is going back to retest to this particular highs. Then this is confirmed as an equal low. This is your 4 hours time frame. You can drop down to the lower time frame. You can drop down to your lower time frame, which is 1 hour time frame. This is 1 hour time frame to look at what the market is doing. Your main focus is paying attention to this zone. This is your zone of interest. We are looking for a buying opportunity. So until price come here, this is where you'll now be looking for multiple rejections to join the price. Make sure you confirm before you enter. So watching it, you can see it more clearer on the 4 hours time frame. That's why I like watching from the 4 hours time frame, because it gives me clearer market structures. So now I'm looking out for these particular zones for price to come back here. If it respect this zone, then I will keep selling. But if it doesn't respect this zone and you notice price smash out and retrace back again, smashed out, what you have to do is to wait for price to come back to this particular zone. You can look for a buying opportunity again. You are no longer buying to the next high, to this high. Where you are buying to is to this particular highs. This is where you now be looking for rejections for the sellers if this zone got broken, because I'm saying this and a equal low. So if it's being respected, you figure out price, you have to trend all the way. Let me mark it out so that we can call the key zones. You see its price, you have to trend all the way to this, to 1.18185. You can see it 1.18185. There's a key zone. That zone is very strong. There's the highest point price started dropping, making a drop from. You can see it clearer. So this is my expectation on Euro USD. Still expecting more drops on Euro USD to these particular zones before the buyers can start buying. But eventually, price bought without retracing to this low. Price bought to this high without retracing to this low. Then this is where you now be looking for an opportunity that will shoot price down. But eventually, before price will come to this zone, it will have to drop back to this low, test it before it will have to come back to this particular height, which is giving you a good risk reward ratio here. So if you are targeting from this zone, let me clean up this. If you are targeting from this zone, this will be from this particular low. If confirmation is being, if you see the confirmation, if you are targeting, your TP will be to this highs. This is about 5 risk reward ratio. You can see it on the 4 hours time frame very clean. You can swing this. You see it. So your stop loss will be around this low. Make sure you look for confirmations. Make sure you confirm before you enter the trade. Then if your TP should always be at this high. Then this is GBP USD. Okay, this is the GBP USD I took last week. So still holding this trade. Okay, this is BTC. So BTC, I'll be going down to the daily time frame to see what BTC is doing at the daily time frame. This daily time frame on BTC. Daily time frame is currently giving us that price did what was trending to the upside. This is its breakout structures, giving us continuation of the buyers. So price keep on breaking structures to the upside, telling us that price is going up. Then keep on breaking to the upside, telling us that price is going up. What happened? Eventually, when price came to these particular zones, price came to these particular zones. Okay, I didn't get the line. So price came to this zone. What happened? Price retraced back. It came back to this low. This is the low that started that impulsive move. This is the lowest level that started this impulsive move all the way to this particular highs, telling us that this low need to be respected. And price have respected this low. what you need to do is to do what, because this is an equal high here, confirming that price is pushing up. On BTC, you can notice that price is pushing up. So your TP, you need to, since you haven't uh joined trade, if you haven't joined trade, wait for price to take out this high, then give you a confirmation, a retracement, then you join back, because definitely price will be coming all the way to this particular highs here. BTC's trend is going up. BTC is coming back to that particular zones, being respected, because you can see the lows are being respected. The lows are being respected. So telling us that BTC is currently trending to the upside. This daily time frame. I'll drop down to the 4 hours time frame. This 4 hours time frame. 4 hours time frame. Print out these key zones here. The 4 hours time frame. Print out these key zones, telling us that price came to this lowest level that price came to, and then push up to take out these highs by this impulse move. Price trying to retrace back, but couldn't get to this low. It went up, smashing out these highs again. There's when it tried to retrace here, giving us confirmations that it's no longer pushing to the downside. And this is when price keep on going to the upside. So still expecting BTC to come here. This is a zone I'm still expecting BTC to come back to, where the sellers can push a little bit, then before continuations. So if sellers are able to push a little bit into these particular zones and then giving you confirmation, pushing out, because this will now be giving you like what, a head and shoulder pattern. For those of us that are familiar with head and shoulder pattern, you can figure it out here. Then that price need to come back here, give you a confirmations that will be pushing price all the way to this high. So if you reduce this, you notice that this is a key zones where you'll be looking for a buying opportunity if this low, if this high is being respected. This is a 4 hours time frame. So this is a zone you are interested in. This is the zone you are interested in. This is the key zones you are interested in. This is your this is the key zone you are interested in. This is your point of interest where you are interested in buying, in selling. This is where you are interested in buying. See, this is BTC, it's still trending. And we'll go down to US 30 for those of us that are trading US 30. This is US 30. You can see US 30 currently giving us an uptrend move. So respecting zones, US 30 is currently in an uptrend move, breaking out structures, telling us that price is going to the upside. See, it's telling us that price is going to the upside. So this is it. I've marked out the key zones on the daily time frame. So now I've dropped back to the 4 hours time frame. You can see the zones I marked cleanly here. You can see it. This is the zones I marked from the daily time frame. And you notice price has broken it out with this impulsive move, telling us that US 30 is going up. You should be looking out for a buying opportunity on US 30. So if you are trading US 30, you should look for more buying opportunity, because US 30 keep on breaking these structures. Good evening. You keep on breaking structures, and what happened? Price started moving up. So giving us this as a breakout structure again, price started pushing up. You see it? So where are you interested in buying on US start? What you have to do is to wait for price to come back to this zone, because price will definitely come back to this particular zones. So once price drop back to this zone on US 30, this is where I will now be looking for continuation of the uptrend. This is my 4 hours time frame. So explain again how you mark the key zones on US 30. Okay, let me start again. Let me clean up the analysis. Let's start it up again from the daily time frame. I started from the daily time frame. This is the daily time frame. Daily time frame clearly gives us an uptrend move. You can see it. breaking structures. This is the highest level it's went to here, which broke structures. And then this is the lowest level here that price came to on your daily time frame. This is the lowest level. I noticed this lowest level was tested twice before this impulsive move. So now this candlestick is giving us a kind of a break at this particular zones. So it's giving us a break. What you have to do, this low that causes that break is what I marked out. And then I go down to my 4 hours time frame. It gave me a clear market structure here that price came back to this particular zone, tested it twice, giving us an equal low here. You can see it. And then price push up, taking out these highs. This is giving us a continuation of what's uptrend. Look at it. This continuation of an uptrend. And then this high again was taken down, giving us continuation of an uptrend. Then where are you now looking for a buying opportunity? The low that started that impulsive move, you mark out the opposite candle. Price will have to come back inside here, give you a confirmations, and then you follow the price because now price is giving us a bullish move. Price has started a bullish move. All you have to do is to join the buyers. So you shouldn't be selling against the market. And then if you go down to the 4 hours time frame, you can notice your 1 hour time frame is trying to make a retracement. 1 hour time frame is trying to make a retracement. And then we're having this low, price printed this low on your 1 hour time frame. So if you want to ride it on your 1 hour time frame, if this low is being respected, this is it on the 1 hour time frame. If this low is being respected and you notice price push up, know that this is a continuation. Then if this low is being broken, then you can counter trend down to this particular low. Okay. All right. It said, can we check Nasdaq and gold? Yeah, definitely we can. We can check Nasdaq and gold. So I'm going. I think gold is the next one I'm going to look at for after you say thank you. I grab something. All right. So you notice price will have to come back to this zone. So I'm holding this particular low because anytime price breaker structures and then print a low, so it always give me that low. Price always respect that low. I always figure out price respecting that low. So if this low is being broken, anytime price break this low, is giving me a possible reversal. So I can scalp trade down to this particular low. This is exact thing that happened. This GBP USD trade I took here, you can see it. The GBP trade I took at this particular zone. There's exact setup. There's exact thing that happened here when price broke out strongly. I waited, price came back to this particular zones, and then I sold down. So pointing out the next low because price will have to come back to this low. Then this is now when I'll be looking for rejections. So don't drag my TP down to this particular low. Like I don't drag it down to this particular low because price can come at this zone and then make a rejection, start bouncing up. So that's why I always put it at this particular zone. So if price should hit it, then I'll be looking for a buying opportunity at this particular zones. You see it. So you should be paying attention to this key zone and to this key zone. For those of us that want to sell against the trend, pay attention to this key zone. Then for those of us that want to follow the trend, then wait for price to come back to this zone and then you join the buyers if you want to follow the trend of the market. And this is okay. This is good. I think I'm now in good daily time frame. If you notice, good daily time frame is giving us what gold was bullish. I've been waiting for reversal on gold. Gold no one give me reversal. Gold was bullish, and then coming to this particular zones, you notice gold try to give. a pullback. Yeah, price try to give a seller zone. So I always see this pattern as a seller zone pattern. You notice a piercing man and an engulfing candlestick. This is a huge engulfing candlestick from the daily time frame, pointing down, telling us that the sellers are in the market. All right, this is a huge engulfing candlestick telling us that the sellers are in the market. So what I will be looking for is where to actually join this selling opportunity, because price might definitely might back here like this and rejected, might come back here and reject. Same thing, price might still from here reject, because I'm still expecting price to come back to this low. So if price is able to do what I expect, then this I'm expecting price to come back to this zone, because I was waiting for price to actually come back to this low and print a confirmation, then rejections back to this particular zone. Then price came back here. You notice this is a zone, this is a high, this is daily time frame. If you go back to 4 hours time frame, you see that this is a clean high here. Or if you go back to the lower time frame, you see that this is a very huge high here that price tried to make a rejections on. So price try to make a rejections on that particular zones. So I will be taking I always try like marking my zones from that highs to the body of the candlestick. So price might come back to these zones and then give me a confirmations. Then I'll drop back again to this low. But if price come back here first and give me confirmations, I'll have to take it to this particular zones. You see it? So these are my 2 points of interest where I'm looking out for on gold. And if you notice on gold now, this is the high that got broken. This is the highest level on daily time frame that got broken. So price got broken with this impulsive move. You can see the impulsive move. So this zone that actually caused an impulsive move, this is a zone I'll be marking on gold. So if this zone, this low is being broken, then I'm expecting gold to drop back all the way to this zone, because this is the zone. If you notice, price was trending, and then this is the highest level price trend to, and then created this low that causes this impulsive move. If you notice here, the buyers were just buying, no much selling opportunity here on the daily time frame. So I'll go down to the 4 hours time frame. You can see clearly of what I marked here. You can see on the 4 hours time frame, this is a key zones. Price tried to create an equal high here. Price tried to create an equal high here. So 4 hours time frame is giving me an equal high at this particular zone, telling me that gold is likely to sell on my 4 hours time frame. There's what the 4 hours time frame is telling me, that gold is likely to sell. And I'm still having my key zone here around this particular zones. I notice this is the high that got broken, and price is trying to respect this zone. That's why you're seeing these rejections. Price is trying to respect this high on gold. So, and I still have this particular highs again, which price is trying to respect. That's why price move from after this price make this high, and then price created this low. Price tried to approach to this high. What happened? It pushed price set by to this particular zone. If you go to the 1 hour time frame, 4 hours time frame, 1 hour time frame, you see what I'm talking about. This is your 1 hour time frame. Confirm double top. Confirm double top telling us that price is selling. So now I'll have to reduce this and still having my key zones being drawn out here. Price is trying to make this make rejections around this particular area. This is an equal high that price broke. This is a zone here that price broke. This is giving us a breakout structure, a change of character, telling us that price is likely changing character. to the downside. You see it. That's what gold is trying to print here. Price came back here, make a rejections back to this particular height. And what happened? Price drop back again, taking out this zone, change of character. So now I'm expecting price to come back to this particular highs that caused this impulsive move. Then that is where I will now be looking for a selling, massive selling opportunity. If that confirm, then the selling go mad with that. Go sell reach all the way to this low I marked out on my daily time frame. Because I've been waiting for a reversal. If that confirmed as an equal high, because this is first confirmation of an equal high. If price actually do this, go back again into this zone, reject the way here rejected, go back again and reject again. What happened? Straight down selling opportunity. The selling go massive with that. This 4 hours time frame. Like I always tell you guys that if price should come to your key zones, what are the confirmations you look for? What do you look for before you enter? Price should retest at your key zones twice. Okay, when price come back to these particular highs, when price come back to this zone, they say this was an impulsive move. Let's say this was a key zone. This was your point of interest. And price make a rejections. This is a first rejections at your point of interest. Price come back again to this high, but couldn't break again. This is a second rejection. You notice price rejected all the way to this low, pushing massively on your 4 hours time frame. And then what happened again? Sorry, this is 1 hour time frame. Price pushed back into this zone again. Before price rejected, what happened? Multiple rejection. This is an engulfing. For those of us that are not familiar with engulfing candlestick, this is an engulfing candlestick being printed at this zone where price started the rejection. Price must definitely give you multiple rejections. That's why you don't need to rush your entry. You don't need to rush your trade. Make sure you confirm price is rejecting that zone. Price might try to sell massively. Leave it. It will come back again. As it take go down, I always say, there's this, say, I always said that if anything that goes up will surely do what? Come down. If you throw stone for up, it will come down. So if you drop, boom, leave am, it will still come back up again to that your point of interest where you are still looking for that. Where you are looking for what? Opportunity to sell, opportunity to buy. So this is it on gold. You can see price trying to make rejections. This high here haven't been tested. It haven't been broken, telling us that gold is likely in a downtrend. This is what a change of character. So for those of us that don't know, this is a change of character, low being broken, price trying to reject here. So if price confirmed at this particular zones, boom. All right. So we'll go to the next one, which is USD JPY. USD JPY I almost came to the live on Friday. I almost shared the group. I almost shared it. I wanted us to trade as a pair, but I didn't announce it though. But I was looking for the opportunity here at this particular zones. I wanted price to give me confirmations before I will post the link for you guys to join the live so that we'll trade the CPI together. But what happened? I think I during the news before the news started, I slept off, and the news happened when I woke up, which have already happened. It invests me, and the news happened exactly the way I expected it. So this daily time frame, this is the highest level price got to, causes this impulsive move. You notice price come to this high and dropped. What happened? Price come back again to this high. Like I told you, anything that goes down will definitely come back up again. Price come back to this particular zones. Then what are you to wait for? If price is always at your key zones, if you confirm it on your higher time frame, that is why you need to confirm your structures. If you are trading, you need to confirm your structures from your higher time frame. It gives you the best structures. So when price come to your key zone, that is when you now drop to your lower time frame. That is when you now drop to your lower time frame. So I dropped to 4 hours time frame, and price was at my key zone. You notice price was at my key zone, respecting these particular zones. And then I dropped down to 15 minutes time frame. This is when the news happened. So price broke structures. I saw this engulfing candlestick, and then waiting for price to actually come back to this particular zones. This is my drawing here. So this is the high because price broke out of this low. Price broke out of this zone after giving me an equal high here. Price come back here. This is multiple rejections. So around, I was waiting for 1 o'clock so that by 1 o'clock I can share it. And then by 12 o'clock, I, I skipped. So this is it. Let's analyze it back again. Then this is the highest level price got to that causes an impulsive move, trying to make a rejections. And then this is the lowest level that did what that started this impulsive move. And you are seeing this gap. You are seeing this gap between here and here. And I've always seen that anytime price prints a gap, it will always come back to fill up that gap. I've always seen it multiple times. So if price is actually coming back to fill up this gap, then I'm expecting price to come back to this particular low. Then this should be confirming as an equal high, pushing price all the way to this particular low. You see it? This should be an equal high, pushing price to this particular low. So this USDJPY printed a gap which haven't been filled here. So price came back here, it just tapped on it and then pushed up. It tapped on it, giving us a hammer, and it pushed up. So it haven't come back for the second time to fill it. So I'm still expecting price to come back to this particular zones to fill it. This daily time frame giving me the structures of the markets now. You can see the daily time frame has given me the structures of what I'm expecting and what to do in the market. So now I'm down to 4 hours time frame. Now I'm down to 4 hours time frame. So 4 hours time frame is now giving me kind of an equal high here. You can see it. Price is trying to give you an equal high. Rejections put to the low. And another one, you can see when price is coming here, what's happened? The the candlesticks are becoming smaller, smaller and smaller. So price is printing small candlesticks all the way to this particular height, but it haven't confirmed me here yet. It only gave me one confirmations that it want to drop, but I can't say this is a confirmation yet because I always have like if you come back again, smash out, then this is when I will know that this is a confirmation. It haven't tested this high. This is an engulfing candlestick. For those of us that are not familiar with engulfing, you notice engulfing candlestick being printed on the daily time frame at my key zone. This is a first confirmation. I don't jump immediately here because I need to wait for price to come back here again and then print another confirmation, pulling down, pushing down, breaking out this zone I mark again. Then this is when, as the market is tapping here, I can now join price all the way back to this particular low because I know that once price is rejecting that zone, the next zone price is targeting is this. So I can take TP at this particular low as my first TP. Then once price break this low, then my next P should be at this particular zones. See, my next TP should be at this particular zone. So I will be patiently expecting this JPY to play out. So I'll be patiently waiting for 4 hours time frame to come back, push in again. Because I've seen one rejection. So I won't go in with this one rejections yet. I won't go in with this one rejections yet because going in fully down to this low. So since I'm going in fully down to this low, I won't be going with one confirmations unless I want to scalp with 15 minutes time frame. Then as price came back here, give me rejections to scalp this selling, I can drop down to 15 minutes time frame or 30 minutes time frame. Then I scalp this one candlestick, I exit. See, so that is why I want to scalp that news. That news I wanted to do scalp it because I know that price will definitely come back to this low. So price came back to this low and push up again, coming back to this particular high. So I'm waiting for confirmations here, rejections. If not, I'm not going in for the selling opportunity. Printed one confirmation, engulfing, not enough. So I'll be having more inside here into this boss for continuation of the seller. So expecting a bearish move. So there will be a momentum of bearish move you'll see. You know that price is actually pulling out from that particular zones. Not small candle. There will be a confirmation candlestick. Okay, look at this now. Like this is a what? A shooting star. Price printed a shooting star out of this low. What happened? Price is tested, pushed down. Sellers sold massively, selling down to this low, breaking out these structures. This is when price broke out structures, giving a seller zone. Then price push in here. So if you are selling massively, if you are buying massively, you should always be looking for a point of interest at the highest level price made and at the lowest level. So if price rejects the highest level, it's telling that price is coming back to the lowest level. All these ones are just minor rejections. You can see price will pull here. Definitely, there will be minor rejections. It might want to deceive you that it will go back up. It will pull with massive rejections into these zones and then pull back again. Exactly what happened on this trade I took on 50 minutes time frame. Exactly what happened here. You can see this pulling. I was holding the trade, price was selling. See the way it pulled back to my entry. This was what news. I left it and price returned back again because I'm trading with the 4 hours time frame. So when that thing happened, I went back to my 4 hours time frame. I noticed that price need to come back here for the second time again. I didn't panic. And what happened again? This is a bearish move, giving me an engulfing candlestick. So this is same thing here on USD So I'm expecting a rejections at this key zone. So this is where I'm expecting a rejection on USD You can mark it as well on your chart and expect a rejections on there. You can drop down to the lower time frame, your 4 hours time frame. This is your 1 hour time frame. Wait for rejections at these key zones. Make sure it's confirmed. So don't follow impulsive move. If you notice a huge candlestick smashing out this high, this giving you a break of structures, price will have to still come back, break in into this zone again. And then this is where you look for a selling opportunity. I've seen that happen multiple times. Price will break out, giving you a break of structure to the upside. It might break all the way to this zone. And then what happens? It will retrace back again. Some people will think that price will have to, it might break like this. Some people will think that price will have to come back here and push up. Notice price will break in back again and then respect this zone back to this, continuously heading back to this particular low. Because once a high is being broken and price come back into that zone that is being broken, it's telling you that price is selling down all the way to the next low that price made. So that's next low. I always call it a trend low. So that is a trend. There's the lowest level price do what goes to that causes an impulsive move. You know, not this low. I don't count this as low. I don't count this as low. These are minor pullbacks. These are minor pullbacks, not lows. These are minor pullbacks, not lows. Minor pullbacks, not lows. Minor pullbacks, not lows. The main move is here. You notice once price tap here, boom. Then this is where the buyers are heavy in the market. Everybody is throwing buying opportunity. So if you don't understand the structure, if you didn't capture it early, you won't be able to join the buyers. So this is for USD and we'll be going to the next zone. We'll be going to the next one, which is USD CHF. This is CSD CHF. We'll go down to the daily time frame to see what ESD CHF is doing. On the daily time frame, you notice ESD CHF is currently on a downtrend, trending down. There's a downtrend move, a downtrend move. So a downtrend move. So price is giving us a downtrend move. The highs are being constantly respected, telling us that uh, the sellers are still in the market. The highs are still being respected, telling us that the sellers are still in the market. Any high that got broken, you notice price targeting to this high. This high got broken, price will target to this particular highs. So this is the high that price is respecting now. So this is my valid high. This is the one I mark as my valid high. And then this is the lowest level price has gotten to on the daily time frame. I'll go down to the 4 hours time frame to look at what the price is doing. On my 4 hours time frame, now I've gotten this my high as my key zone where I'll be looking for what is selling opportunity if price eventually trend all the way to this particular highs and give me confirmations, I'll sell down. So if price eventually didn't do that, because here I seen this as a break, price is trying to make a retrace here. That's why you're seeing this price trying to pull back here. That's why you're seeing price trying to pull back here. So price break, this is the low that causes an impossible move to get to this high. This is a break, price retrace, and price pull down. Price trying to make a retracement again. Price is trying to pull down. So you don't join this small move because you're having price is selling all the way to this low. So I'll be looking for, where I'll be monitoring the prices at this key zone. This is where I'm waiting for an opportunity, for a selling opportunity. This is where I'm looking for my selling opportunity when price come back to this low, when price come back to this high. Give me a confirmations. He say, how can we know the the minutes pullback? The minutes pullback like how? So these are minor pullback. All this pullback, minor pullback, there you can enter it on the lower time frame. If to say you capture this pullback early, you go down to your lower time frame, like your 15 minutes time frame, you can capture the move massively. You can see even that small move that happened on the 4 hours time frame. Look at it here when price came in here. When price came in here, look at confirmations, engulfing. Price printed a pin bar, printed an engulfing. This is a break, price break with a full body. Price tried to make a rejections. He make a rejections. What happened? Giving us a shooting star. This is when price printed a shooting star that smashed that. So had it been, you notice that is why I always say if price should come to a high, the next zone your TP will be is what? The next low. That's why I always target to the next low. What happened? Price came to this low and make a rejections. This 15 minutes time frame. This can show you clearer of how the of how your TP can be, of where your TP can be. You see, price, you enter from the high, your TP can be at the low. Price came back to the low, pull back. These are rejections. It rejected back to this zone where it got broken. Rejected back to this low. So it rejected back to this particular zone because this is the zone that actually caused this impossible move and then caused break. Look at it, break, retrace. That's why price was able to come back to this zone. And then this is another selling opportunity again, smashing out this low before price came back in. See it. So going down to the lower time frame, this is higher time frame. Say, okay, let me say. Say, how can we know the minutes per by? Say, well done, Sammy. You are doing a great job. Thank you. Say, I mean, minor pullback. Okay, these are minor pullback. Oh. Look at minor pullback. All these small minor pullback. This is minor pullback. All these are minor pullback. See then, the major the major pullbacks are the ones I'm marking. Those are my key zones. Those are the zones where we say if you enter, at least if you swing trade, if you hold trade for, if you not say emotion, you are emotion the battle, at least enter swing, enter trade, hold trade, learn how to hold trade for 1 day, 2 days, 3 days. If price hits your TP, you confirm am. Even with the lowest lot size, you will make better money. Unlike entering trades that you can enter trade from here and you exit at here. You try to make a trade again. On entering, you might enter the wrong side. What happened? Your stop loss don't hit first. You don't first collect one loss. Then another one again, you waited again. Price came back, you enter, you push back again. You go back again. Another, you might hit, while following the trend, you might hit like 2 to 3 stop losses, reducing the money you're supposed to make. But if you use the higher time frame, enter and finish the move, you go just once you have entered from the high, confirm it, your stop loss is 100% safe. Before price will come back to that high, it will be very, very hard for price to come back that high. So only what price can do is pull back, go back, pull back, go back, smashing those ones that are entering with lower time frame to be taking their stop losses out. Pull back until it will come back to this zone. This is where you will now be looking for a massive buying opportunity again. So same thing, you can still follow it on your 15 minutes time frame. Say good evening, sir. Hope say I come later. No, it didn't come late. I think okay. I've gone with remaining 1, 2, 1, 2, 3. I'm thinking of 1, 2. Okay, yes, this is France. This is USD CHF. So expecting price to come back to this particular zone. This is the low price is rejecting from. So if you are trading with minor pullback, then you should be trading with there are if you don't want to be trading with heavy pullback, let me see if I can use a fresh chart. That is waiting for this low price reject. Then if price is trying to make a rejection, okay, let me use AUD USD for example. So good. So if you notice at this particular low, the minor pullbacks, this is it. Price make a rejection. This is an engulfing candlestick being printed here. So the minor pullback, you notice price gave us a minor pullback here when rejected. So for me, I would have expected price to come back here, but price didn't do that. That's why I like some people said wicks are not included. But for me, wicks are included. You can see in this aspect what happened. Price respected the wick of this candle. So had it been, I would be waiting for my point of interest at this zone. What happened? I would have gone this as a missing trade back to this low or back to the next low that price created. It should have been it should have been a missed trade. So that is why if you notice all the analysis I'm making, even for this, I mark out what? Look at it. I mark the body. The wick must be included. Look at this. I mark out the wick as the lowest point price hit that causes impulsive move. So price might come back, reject. You notice price might come back, close, but price might come back at this particular zone, give us another week again, close at the body of this price, close at the body like this. But this low must be tested twice. This is what I've watched multiple times happened in the chart. I've seen it multiple times happen in the chart. That is why I mark it. and it depends on where you are marking it, not all the weeks like this one, not all swings that you mark the weeks, not all swings, not all swings, not all these small swings. The main week, look at this, the main low that started an impulsive move to get to this high. You notice this is the highest level that causes an impulsive move to get to this low, and it broke it, coming back to this low. That's why price make rejections. What happened? It targets to this next high again. It was swinging here, consolidating, telling that the sellers are in the market. So had it been you are on the lower time frame, would have been selling from here, because this is a full confirmation that the sellers are in the market. It would have been selling from here, and price will take you out, continuously going. This is the main point where price is interested in. That's why price came back to this zone. What happened? Immediately it collapsed. It's collapsed down, straight down, almost to this low, and it's making rejections. So that's why I'm still expecting price to come back to this particular low again. So are you saying that weak points valid for entries? Yeah, definitely. I always mark it. If you notice this way, I mark the body and wick. I always include the wick. Okay, look at this now. Using this as an example. What happened? Price came back to this high. Look at the wick and sweep out. What happened? It started selling. Okay, had it been I mark out from here, let's say, okay, I mark this candlestick from this particular zones now. And let's say, okay, let me clean out this so that we can understand what I'm saying. Let's say I mark this candlestick from this particular zones, that if price should come there, I'll be looking for a selling opportunity. And I'll be marking my selling opportunity here. And then dropping my your this thing, okay, you drop your trade unless you space it. For those people that always put tight stop loss, you mark out your zone, you put your stop loss like this. Like say now you get the market, you see price will finish, it will romance you waiting no good. That's why if you are trading, put your stop at the high. If you want a tighter stop loss, say be putting your stop loss like this, you have to learn how to wait for confirmations. And this is it. Price came to this place. What happened? Price put in with a massive candlestick, give you a week. Like I said, it must give you a week up to this particular zones. It might not close with a body, because if it close with a body, wahala there for there. So what happened? It didn't close with a body. Inside here, it still give you a week into that particular zone. And then look at when it closed. It closed inside this as a body. See, the body closed with the body of this. So telling you that this is a valid selling opportunity. That's why sellers was able to sell from here. That's why sellers was able to sell from these particular zones. Sell down, smashing out this low, and retrace all the way to this high again. And this is boom, price sold again. You see it. So here, if you're looking for a tighter stop loss, now when that's why I say look for confirmation. At the second test, look at it, the second test. This is when you now be putting your stop loss, like say now you get the markets like this, and then dragging your TP to 1:200. This is 1:13. At your second retest. But if you're entering from the first retest, make sure you give your stop loss space from your entry. From your entry, make sure you say you give am space. And if you know like your stop loss to always dey like this, then you have to learn how to wait for a second retest. If you can be telling yourself that in the market I want to be waiting for a second retest at my key zone, even though price hit your key zone first and you miss the trade, tell yourself I'll wait for a second retest, the next key zone, the next one, then you can see the second retest, you enter it. Everybody miss trade. See, everybody miss trade. So if you don't see that second, I don't go in. Anytime I enter with first retest, let's say anytime where money dem my head say, "Ah, I want go find money for market, I go with first retest and stop loss straight, because I want to keep my stop loss in a very tighter zone. Maybe I can put my stop loss a bit above this high. Price will do what? Will first take your stop loss out immediately. That thing have happened to me multiple times. Immediately you hit your stop loss, wah, to start going to your direction. It will be like saying, you don't know what you are doing. It will be like saying, you don't know what you are doing. But you didn't actually wait for what? The second retest. If you say you waited for the second retest, this is this, your stop loss would have been what? Safe. See. So this is it. And for years, this Swiss francs. We are going for, okay, this is it. Let me analyze and mark it out this. So I marked out this high, the wick to the body of the candlestick, and then here making up for rejections, and I'm having out this low as the lowest point it's got to. So still expecting more drops, still expecting more drops. So far this high is being respected, price is still selling, unless this high is being broken. Well, then that's when you know that price is coming all the way to this high. So far say this zone is being respected, price is still dropping down to this particular low. So this is where I'm expecting a buying opportunity, a selling opportunity if this high is being broken. So if this high is being respected, you notice price coming all the way to this low, because here I see this as an equal low that price created here. So that's why I'm seeing price to be coming to this particular zone. Price created low breaker structures, and then it respected this zone once. And I've always seen charts that at times, if you respect, if this first key zone, that's why if you're entering from these particular zones, you don't need to swing your trade very long. When you can take trade very long, 1 to 10 risk reward ratio, 1 to 20 risk reward ratio, 1 to 6, 1 to 100, is when price is at the key top where it started that impulsive move. Give you confirmation, then there's when you can take from here all the way down to this particular low. But if price should break our structures here, what you need to take from here is what? 1 to 2 risk reward ratio. I always go to 1 to 2 risk reward ratio or 1 to 3 risk reward ratio. Then you target to this low that causes this break. This low that causes this break. You notice price came back to this low. This is a low. This is a low that swing all the way to this particular height to cause this break. And then price come back again. It could not go back to this low. This low is being respected. Price go back again, switch out, continuation. And then this is when price came back to this particular highs with a massive candle. So those of us that are not familiar with, I didn't mark out your key zones where I'm not familiar with rejections. You know, think that this, since price printed this candlestick, this is a continuation of the buyers. Not knowing that price printed this to hit at your key zones at a key high where the sellers are heavy to pick the market down. Then from here now, you might be waiting price to make a rejections here. You might think that here is a breakout, price to make a rejection here, and then you join the buyers. And price will do what? Take out first. You think that you missed, come back again. Continuation. These are sellers. See, so this is it on the 4 hours. So this zone is being respected here once. Price try to approach on it, see trying to reject at this particular zone. So this low haven't been broken. I'm still expecting price. This low, the way price rejected here, printed an engulfing candlestick, it dropped back to this zone. Notice this is low. Okay, I even marked this low before. This is low it created from the 4 hours time frame that push up to get to the high, and that's why price is respecting this particular key zone here. So if this low is being broken, price will have to sell all the way to this particular low or this zone that causes that impulsive move. It's probably down to this particular low. But this is kind of an equal low pushing price all the way to this high. So this rule, no matter what the price is doing, my key zones are here and here. If price sell down from here, reach at this particular zones, then I'll have to take a buy straight down to this particular highs again. Then that is a very nice high swing. Even with the lowest lot size 0.01, you could make better money from inside. If you enter swing trade, leave your this thing, leave your trade may work as small. Say please do another analysis for 4 hours, which another PSR. Okay. This is AUD USD. So AUD USD, let's look at AUD USD, what AUD USD is doing. So this AUDUSD, if you look at AUDUSD, you notice price on the daily time frame. Okay, let me go down to the daily time frame to look at the structures. On the daily time frame, you look at the structures is giving us what? A bullish move. Price broke out of this low and then giving us this as the lowest level here on AUDUSD. So what happened? This is the zone that got smashed out by this high here. So let me see it. I got smashed by this high here. So we're having here as our key zone on the daily time frame. We're having this low as our key zone on the daily time frame. Why did I mark that low? Because it's this low that causes an impulsive move to take out this high, giving us a continuation of the push. That's why you see price trying to make rejections at this particular low, this daily time frame. So if I go down to my 4 hours time frame to see what the price is doing at the 4 hours time frame. So the 4 hours time frame, you can see the zones I mark is very wide. So you cannot wait for that on your daily time frame. What you have to do is to go down to the 4 hours time frame. You keep this low marked out. So this is a continuation of the sellers, and this is a continuation as well of the sellers. So price pushed up to get to this highs, and then price rejected. So in between here, you can see price trying to make a consolidation around this particular zones. Price broke structures, we tested once, push back to this particular low. We tested for the second time again, push back to this particular low. We tested for the third time again, couldn't push back. You notice price head back again to this zone and come back here, giving us a bearish candlestick. Price have tested here for the second time, and now we're having this zone being marked on our 4 hours time frame, sorry, on the daily time frame, and this zone being marked on the 4 hours time frame, giving us 4 hours time frame gave us an equal high here, sorry, an equal low that pushed up to break out of this high, giving us a break of structures. So that is why I mark out this zone, because this is the highest level price created that started this impulsive move. So price is still dropping all the way to this low. Price dropped all the way to this low, and I tried to retrace on this low, but couldn't. It tested this zone twice, so and tried to make a rejection. So what I'm expecting here is this. Since price is doing this, what I'll have to do is to wait for price. If price should give me a clean break out of these zones, this is giving you that price is trending all the way to this particular highs. Then the next key zones you have to mark is this. This is a low that push price to get to this high. Notice price sold down, taking out, smashing out this low, giving you continuation of the sellers. Price tried to retest it and respected it. Price smashed out this low again, giving you a continuation of the sellers. Price pushed up to this particular zone, respected it, continuations, then respected it. So here, I'll say price is doing what? Consolidating at this particular zones. Price is ranging at this particular zones. So until this high is being broken, why did I consider this high? Because this is the high that actually got what? This is the high that actually retest on this low. So it's giving here a valid zone. That's why price is respecting this zone multiple times. So it's giving here a valid zone. So if I'm to mark from body of this to this particular zones, you see that multiple times is rejecting here. So now I'll consider this as a consideration until price come to its low, because this is where I'm expecting a buying opportunity from. Until price come to this low, I will react, or price take out this high, and then this is when I will react as well, shooting back. Because why? Price, this is the lowest level price created to get this high. Price broke it out. You can see the massive breaking. Price is respecting this zone multiple times on your 4 hours time frame, giving that this is a valid zone. So anytime this zone is being broken, there is a heading up to the upside. See it? So if price is rejecting this zone, then it will have to come back into this particular zones, print me rejections. Then I will do what? I will buy back to this high, because this high haven't been complete yet. If it's selling down to break this low, it will have to then come back here first, give you a confirmation, test it, reject it, and then before the sellers will start selling massively to break out of this low. Because here, price have tested here twice, very active. Price push up to take out this high, taking out this high, continuations. So that's why this zone is very valid, because now price need to consolidate at this area where it's actually give us this equal low from. So any break out of this area is telling you that price is coming all the way to this high. So what you have to do is, once price breakouts, then you can drop down to your lower time frame, your 15 minutes time frame, or your 30 minutes time frame, or your you drop down to your lower time for your 5 minutes time frame. Look for your confirmation, your entry confirmations. Is it your fair value gap? Is it your order block? Is it your demand zone? And that is where you'll be paying attention to all those zones at the lower time frame. You can see the way news happened. News pushed into this zone because here was valid. It returned it back again. So I've discussed about news before that anytime we have the patient traders and we have the aggressive traders. So those patient traders are the one that enter after the news. They should wait for 15 minutes. After the news is being released, then the next candlestick is going against the news because it's going to make a retracement. Then those that enter before the news are actually you making use of the forecast and the what, the actual in your forest factory and your FS book. So if you don't know how to read it, you can go through the video. I've done a video on that, on how you can read it. So this 15 minutes time frame, you can drop that to 15 minutes time frame to search for your entry signals. You can see Euro USD, GBP, sorry, ADUSD respecting these particular zones. So this is a very strong zone. Anytime this zone is being broken, straight down. We're having GBP JPY next. GBP JPY on your daily time frame, giving us a bullish structures. GBP JPY with bullish structures, giving us this gap again. Give us this gap on GBP JPY. So why GBP was swinging, see it's making up a structures, the breakout structures retrace, and then this is it, breaks, retrace, This is the zone that actually caused an impulsive move. So I always mark out this low. You notice the sellers were not into this particular zones, and price created a gap, telling us that this gap needs to be filled. So what I have to do is to mark out this low. So price, while filling that gap, then this is where we'll be interested, and that is the low that take out this high. That's why you're figuring out price, trying to make rejections here. So I'm marking this high. Before price can get to that low, price need to come back to this high and do what? Respect it. You can see the way price is coming slowly. Like saying, no, no, what they do. If they work out like snake, they come slowly to this particular zones on your daily time frame. This, if you go like 4 hours time frame, this is your 4 hours time frame. You see, this is a zone I marked and price broke. And this is a gap. Let me reduce it so that this is a gap produced by price while pushing up. And this gap haven't been filled. So that's why I'm expecting this zone to be a valid zone as well. If price is able to come back here, if price is able to come back here, then give confirmation. Then it's telling you that price is dropping all the way to this low. It's telling you that price is coming all the way to this particular low. So this is my expectation on GBP JPY. If you go down to your 1 hour time frame, you notice 1 hour time frame created this zone, and then this as this low, you respected it. You can see it. GBP JPY respects zone a lot. This low caused an impulsive move. Price came back here, respected it. Price come back again, try to respect it. So if it's able to push all the way into these particular zones, then that is where you are looking for an opportunity. Then if it breaks it on your 4 hours time frame, on your 1 hour time frame, if it breaks it, you can see price created this zone here. If it breaks it, it's telling that price likely to retest this zone that have been multiply rejected, and then it's coming back here before the buyers can then continuously buy. So you can scalp a little sell here. You can take the TP around this zone. You can still take it around this zone. But if you don't want to scalp, trade along with the trend. So expecting my key zones at that particular zones. Those are the zones I'm expecting my entry from on the GBP JPY. So I'm supposed to do what is it called? I'm supposed to do volatility. I'm supposed to analyze synthetic, but I think that will be another time. I would have done that. Or do we have our synthetic people here? I think that will be another time. So these are my expectations GBP JPY. See AD USD respecting that zones, and then we're seeing USD Swiss francs. We're seeing USD JPY. Paying attention to USD JPY. USD JPY is the one that is very close to my key zones. That's why I've been paying attention to it since on Friday. Since on Friday, that's when I've been looking at this. So if it's able to reject at this zone, at least this one is the one that is very close. This one is one that is very close, and this as well, this kind of close, but it didn't happen at this high. That's why I'm finding so got trusting that low. So this one is happening at this highest level that price created that causes this impulsive move. So if I'm taking TP, my first TP will be here, and then when this one is broken, second TP at this particular low, and this AUD USD, this is my expectation on AUD USD. All right. Here's my expectation on ADSD. ADSD currently printing, it printed at equal high here, giving us a selling opportunity. that sellers are likely to sell massively. But before the sellers are going to sell massively to smash at this low, if they are really trying going to smash at this low, you consider this price you have to come back here to make an equal high, then before smashing at this low, and then have another key zone here because this is the lowest level that started this impulsive move on gold on your daily time frame. So it started swinging. This is a swing, swing. Price started swinging. And if you notice, gold have been swinging and respecting structures. That's why most people like gold a lot because it respects structures. So it's like break and retest, like he's doing here now. Price make a break and then it's retesting here. Gold like it a lot. It might retest here. That is why I'm saying that it's my push all the way to this high. Then it's if you push all the way to this high, then that's where I'll be looking for rejections and then back to this low. But if price is able to come back to this low and then give me rejections, and then I will be knowing that price is targeting to this high. So gold always like break and retest. So if you're trading gold, it respect analysis very well. And this year starting, I'm having a key zones giving me a bullish move. Our price is currently trending to the upside. So if you're trading year start, you should be looking for a bullish move. Okay, to identify liquidity area. This is it now. This is the double top here that price made. This is an equal low here. Notice as price come here, and then what happened? It shoots up. So your liquidity, this one is liquidity sweep. Price came back here, sweep out, and then looking for the post stop loss. And then the main liquidity are your double top, your double bottom. Look at it here. Price come back here, push, come back again, try to make rejections. Then the third time, this is when price push massively. So that's why if they some people enter and then put stop loss a bit tighter because that area have been rejected multiple times. And now also this also happening on AUDUSD, this AUDUSD. Look at it here. Not this liquidity area price is rejecting multiple times. So they call it different names. So there's these multiple rejections, price rejecting. So anytime price breakout, then this continuation to this upside. So where you're looking for your double top, look at it here at these key zones I mark. So these are your zones. Price breaks, and then there is a massive selling opportunity. So these are your area. This is the area. That is why I always like marking the highs and the lows. So because those highs and those lows are those liquidity areas you call them. So they call it different names. So those are the areas if price come and then this is where you're looking for a selling opportunity. See the way price come here and price sold, price retrace, see the way price break. So price break, it will retrace here and then push up again before it will push down. So those of us that are scalping, look at this zone. Price might come back here. I didn't even advise you should scalp at this zone. Price will retrace and boom again. It might retrace to this high that got broken, and then it will boom before it will come back to this low. So we are always patient. You can see a lot of PS here. I'm trading. I also have volatility as well. I analyze. So whichever one that is close to my zone, that's when I pay attention to. The ones that are far to my zone, there's the one. The ones that are far to my zones, I will do what I will leave them to be playing out until I'll go to reach out the ones that are very close to my zones. Then those are the ones that I'll be paying attention to. Like throughout like this week now, I'm seeing USD. Like okay, good, I haven't gotten to my. I'm seeing this one as close to my zone, so I'll be paying attention. If I see a huge candle, because this is kind of I've seen this multiple times that if price created this if price created this, price always do what? At times use a candlestick and push up to break out. So at times that's why I'm looking for multiple candles, multiple rejections here. Because I've seen one engulfing candlestick. I've seen one engulfing candlestick at this zone. So if I see another confirmations here that the sellers are in the market, then I'll have to drop price to this particular low, follow this the sellers. So you have to confirm if the sellers are in the market, then you have to join the sellers. This is the one I'll be paying attention because it's the one that is close to my zone, and the rest, this one is still far, and we're having this one. This is a key zone. Is this okay? BTC is a key zone that started that impulsive move. Okay, this BTC still coming all the way to this high, so I'm still expecting BTC all the way to this particular high to come back. And okay, this one I'm already on trade on this. Okay, and this one as well. This one is not yet in my key zones. Euro USD. So the one that is close to my key zone, I think ESD JPY. So this is the one I'll be paying attention to. Then to see if I'll take a trade. There's a way you can be able to get rid of what of uh of fear. Trade patiently, trade with courage, trade your analysis with courage, trade your setup with courage. If you see setup, you enter it, ride it, finish. That thing that make you buy, that thing that make you sell, finish it. Not when candlestick is at the junction, you run away. Finish it. If it goes close to your TP, and unless you are okay with the amount, yeah, you can allow it. But say how can one reach out to you? Okay. My number is in my bio description bio. So you can reach out on WhatsApp with my number or through community if you're in my community as well. So you can text me direct, tell me, but to be easy to get it easier, I think in my description here on YouTube, you can get it. My WhatsApp number there. So those are the zones. This is the one I'll be paying attention for now. It's saying nothing any. Okay. All right. You can DM me on WhatsApp with the number in my description. I'll add it to my community. So the USDJPY is the one I will be in this forest. And synthetic, do you know why I haven't? I have to download I have to download uh the app. I have to download YouTube app on this. So I'm using okay, I'll have to use another browser. I can do that. I can analyze synthetic. Let me use another browser to analyze synthetic. Let's look at what the synthetic are doing. Okay, this US volatility 25 index. Let me share the chart. Let me unshare this and then get the volatility. And advance. Okay, we are in volatility now. So this is volatility 25 index 24 hours time frame. I posted it on TikTok that if price should break at this low, you see what I like putting out lows. What happened? Price broke at this low. What happened? Price we tested on it and then it continuously selling. That's why I like marking at the tip of the candlestick. So if I mark from this zone, this particular low, you notice price respected this zone. When that's why if you mark from the body, you mark to the wick, from the body to the wick, so that it will determine your stop losses, where your stop loss can be more. Because if you mark only the wick, price can shape. You see the way price come into this box and then gold down again. So this is a valid zone. Still expecting price to do what? Because price have rejected here once, price will still come back there again. Price will still come back there again. And the main low that price is going to is this low. The main low price is going to is this zone. This is the breakout structure that price did here. Price break structures and cost what? Multiple rejections. This is a double top. This is a liquidity zone. For the people that are not familiar, double top always you just use and say double top now your liquidity zone where there are multiple rejections. So here price did what? Cross create a double top formations and then smashed out. You notice this high was met. That's why this low was able to do what? To be smashed out. Let me zoom in if you don't understand what I'm talking about. This high was met. See it, this high to this body. Price, this is the lowest level that created this high. Price did what? Come back to this high. It didn't tap to this low. It tried to tap to this low, but it couldn't. It came back to this high and tapped into this high, giving you what? A pin bar, a rejections, and then it didn't give you much confirmations here, or less on the this 24 hours time frame, or less on the 4 hours time frame, or the lower time frame. There's where you see more confirmations. You see the confirmations. Okay, where is this one? Let me refresh the chart. Okay, look at it here on your 4 hours time frame. On your 4 hours time frame, price came here. Immediately it dropped, creating this low, creating multiple rejections here. And then this is multiple rejections at this particular zone. Price pulled up. Price created this high. Multiple rejections here. Liquidity area as well. Price pushed down, creating, breaking out this low, giving us a breakout structures. So if you're using the higher time frame, lower time frame for entry, if you go down to 15 minutes time frame, let's look at 15 minutes time frame for our entry. Okay, this is a key zone on the 15 minutes time frame. And look at this when price come down to 15 minutes time frame here. When price come down to 15 minutes time frame here, what happened? There are multiple rejections. That's why there are multiple rejections. See, pushed up, pushed down. This high was multiple times rejected. Anytime price come here, rejections. Anytime price come at this particular zones, rejections. It created a double top. Like I told you, if price is rejecting, multiple rejections, price cannot just, if you're using the lower time frame, you need to calm down and wait for multiple rejections at your key zones. Unlike the higher time frame, these multiple rejections, you notice this price pull down. Second retest again, it printed an engulfing candlestick. This is when price sold down and smashing out this low. So it smashed out this low, try to make a retracement, and this is a massive selling on the 15 minutes time frame. You can see it on the 4 hours time frame. You can see you think that this is a small, massive selling. This is a small selling, but on the lower time frame, it's actually a long sell on the lower time frame. So price, before price will smash out a key low, not all this massive small low. Before price will smash out a key low, it must create an equal high or an equal low for the buyers. Before a key low, a low that causes an impulsive move, price must do what? Before price come back to this low, what happened? Price came back here, second time, and then smash it out. This is when price try to retest on it multiple times. If you use the lower time frame, would have catch this move multiple times. And price try to do what? Retest on it and so down, smash out this low, giving you a continuation of the sellers. This is when price retested on it and then try to go again. Price smash out this low, continuation of the sellers, and created this low again, which price is finding it so difficult here. Okay, I think price smashing out with this move again. This reject this confirmation. Then you see price smashing out with this move. So what you have to do now, you see this high on your 4 hours time frame. You see this now, this small high you're seeing that is causing this break. So if price is able to come inside this zone like this now, let me see. Let me look for that. If price is it should come into this zone like this now and give you rejections, then you know that price is selling that. But if price should break out this low, this high, this is a confirmation to this particular high on your 4 hours time frame because this is the high actually caused this impulsive move to smash out this low. And then you're figuring price coming all the way to this particular high. Then this is confirmed as an equal low if this low is being broken. Notice price trending, retesting here. Not that this high is not that valid. Not that this high is not that valid. Anytime price come to this high, because if this low is being broken, the next zone is targeting is your what? This high. It will just go straight down to this high. Once it get to this high, it will make a retracement. It's under most. Then before price will continuously going to the upside. You see the way the lows are being respected. Anytime the lows are being smashed out, what happened? It's considered a continuation. That's why this low is being smashed out by this body. So now, what will I do? I marked out this week. It being smashed out. You notice this week was not smashed out. That's why I consider this as a high. Because this high now caused this impulsive move to get to this low. So if this price is able to push into this particular zone and smash out this high, your next key point is this. Your next key point is this. And the way the sellers are in the market to push the market massively, see around here. If you want to join the big move around here, and anytime price come back here, price must surely make a retracement. But instead of waiting, you can join the buyers if the buyers break out of this zone, retrace, join the buyers. TP at this zone. You can join them at your lower time frame. Notice on the 15 minutes time frame, there is a very massive trade. Okay, on 15 minutes time frame, if you don't have the premium double top, double button, you can sit here. On the 15 minutes time frame, it's even printing an it's trying to print an equal low here. You see, it's trying to print an equal low, pushing price up. Now, this is the low that got broken. Price broke it out, try to retrace, come back again. This low is being respected. This is what a fake out. This one, liquidity hunt, they find people stop loss. See the way price sweep it, but the body did not what close above below the wick. It closed inside and return with what a massive candlestick. This is giving us an engulfing candlestick. I notice price pushing up. That's why you're seeing this massive push. Price is coming back to this high. But these ones are minor pullback. Not that these ones are not rejections. They are rejections, but they are not. They are rejections and not shaking. Can come here and you notice small pullback. Can come here, you notice small pullback. Can come here, you notice small pullback. But the main pullback is there, boom, back to this low. So that is why as price has created an equal low here. So what you have to do is to pay attention to price. So it's going back to that high. So this high, you notice marked at this particular highs on your 15 minutes time frame. You see price is trying to make respect it. See what is happening there. So if this high is being broken, retrace, then there is a continuation. There is confirmed as an equal low. Now this an equal low. Price have to smash out this high, make a retracement. Then it's telling that it's going back to this particular high. and this is where you'll be looking for a selling opportunity. 15 minutes time frame self don't declare. For the first way they trade 25 index, everywhere don't steal. So let's go down to the next one, which is the reef. Let's see 15 days. What 15 days? What? See that double button everywhere good though. 25 index now buy that and they buy like that too. But that one sweet one. Someone sweet me some. And this thing won't buy like this one. It's buying all the way to this particular size. So let's see what 15 days is doing. So 25 index, this is 25 index, then 25 index we're having, sorry, 50 index, 24 hours time frame. We're having at these highs, boom, price created. And we're having at this low, boom, on the 24 hours time frame, price created. Price bounce at the body of the candlestick. Price bounce at the body and pushed up. Notice price bounced at the body and pushed up, printed an engulfing candlestick. So if you're using the higher time frame, you use candlestick confirmations. Then if you are looking for a lower time frame, then that is where you start making use of the structure shift, making use of change of character. See, when price come to this particular zones. Okay, let's say this is 24 hours time frame. Coming back to here on the 15 minutes time frame. I can't find it. It'll be very hard for me to find it. This is the highest point here, price got to. This is the highest point here, price got to. That causes an impulsive move to come back to this particular low, giving me this as a valid low. This is a middle trade. This is a high that price need to come back to. And now price has created here as an equal low, give me an engulfing candlestick, push up, try to make a rejections, but none of the lows are being broken. The lows are being constantly respected. If you notice what is happening here, see that the lows are being constantly respected, telling us that price is pushing up. So the only low that is here that have not been tested twice is this one. This one have been tested twice and price push up to this high. Price came back here, tested, and this is when price push up to break out of this particular highs, telling us that price is likely is trending to that particular zones. This is it. So this is the low, valid low now on the 25 index, this 24 hours time frame. So I'm having at this high, I will remove this and then having at this low as my valid low. So on the 24 hours time frame. Let's go down to the 4 hours time frame. This is our 4 hours time frame. Our 4 hours time frame having at these highs as the highest level price created and then having this low, see its price pushed up to get all the way to this particular low. So this is my low trend now. And then this is where price has gotten to and trying to create rejections here, giving us an engulfing candlestick. But no trade yet until you notice these lows have been respecting. These lows have been respecting. Anytime price tap at this low, you rejected. And now price has created an equal high. So one thing one thing here is considered that if price is able to break this low, to break all the way to this low, come back again, and then you're having price coming back all the way to this low that causes this impulsive move. Not all this small swing that causes this impulsive move to take out this recent high that price made. So you will notice price coming all the way to this particular low on your 4 hours time frame. So we're having this low as the key zones. If you go down to your 4 hours time frame, your 1 hour time frame, you notice what the 1 hour time frame is doing. Any price came to this high, what happened? Rejected back to this low. this an equal high. Price push down, engulfing candlestick, shoot up again, tested it twice, like I always tell you, wait for twice rejections. Price come back here again, tested here again twice. You dey see am with your eyes now. Tested it twice. The first one push down, come back again, tested it twice, and this is it. Price push down. So if price is able to smash this out, make a retracement. First TP for here, there is trading 1 hour time frame. So those of us that are trading 1 hour time frame, you now be marking these small swings as your TP target. You see, it's all these small swings as your first TP, second TP target. So because if price should break this low swing low, it's coming out way to this particular swing. No big deal about it. No matter what you want to do, swing. Now here the buyers want to buy from. Now here the buyers they buy from. Now top here the sellers they sell from. Now top here the sellers they sell from. You notice when price was trying to approach this high. That's why I like marking it out. Price try to approach this high. What happened? Price make rejections. But this low maintains its low. Price couldn't break any of the lows. Price smashed out these highs, giving us a continuations. And what happened? Price retrace again, come back here, double confirmations, trying to make a pullback. So this is your key zone on the 1 hour time frame. Wait for price to do this breakout. Wait for price to do this and come back here. Then first TP at this particular zone, this 1 hour time frame. But that's as if this thing be there. A 1 hour time frame. And then you can set your stop loss. That's why I say you should always wait for confirmation so that you can set the stop loss where, and then your TP will be around this zone. It's already giving me 3 risk reward ratio if my stop loss is high. The class of when I will confirm and then take my stop loss to be a bit lower, it should give you about 6 risk reward ratio, very massive. So that will give you about, so confirm and then you know you have already gotten your TP target, So the first thing is to get your TP target. Your stop loss is now on your entry zone. So now if price is at 1 hour time frame, you can go down to 15 minutes time frame and still watch your chart. It doesn't deprive you from watching chart. You see 15 minutes time frame did what? A clean move, a rejection second. And this is where price started selling from. This is it. Price is coming at this low. This is your point of interest. Once this zone is being broken, notice on the 15 minutes time frame, it's a very massive trade. You can see the way the sellers are pointing down. So you should wait for confirmations. Any break here because price have been testing here. See 15 minutes time frame multiple times. So any clean from here is telling that price is dropping massively. This 75 index. Sorry, this 50 index, 15 minutes time frame. Then we'll go down to 75 index, this 75. This 75. Let's go down to 24 hours time frame. 24 hours time frame. So if you notice on the 24 hours time frame, price was what? Price is giving us a selling opportunity. Breakout structures, giving us a clear downtrend move. And then this is when price started swinging, giving us a low swing, breakout structures to the downside, giving us a low swing, breakout structures to the downside, giving us a low swing, breakout structures to the downside. So the sellers are still in maintain. If you notice the highs are still maintained. None of the highs were touched. So the sellers are always active at these particular highs. So if I refresh the chart on the daily time frame, if I go down to my 4 hours time frame, if you notice on the 4 hours time frame, look at the key zones I'm expecting price to. And price has given me a breakout structures here on my 4 hours time frame. This is when price break. and then give this a seller zone. It haven't given me a rejections, a pullback yet. So the sellers are still in control of the market. If you are looking for a selling opportunity, always look for a selling opportunity at this high continuation or at this zone. Price might come back here because here price has consolidated rejected at this zone. Price might come back here, reject. That's why at this zone you look for confirmations here too on your 4 hours time frame. Look for confirmations here too on your 4 hours time frame. Then you join the sellers, you can join them back to the low that price created, back to the low. If price is able to push all the way to this low, then if it's only pushing you to know where your TP will be. So that's why you don't need to chase the price. Notice if you push all the way to this low before giving you rejections back to this high, then your TP will still be push back to that low that price created. That is where you'll be targeting. You see, this is your point one, this is your point two. If your confirmations are not seen here, you know that you'll be seeing it here. If you go down to your 1 hour time frame, you understand more of what I'm talking about. On your 1 hour time frame, you see the clean move. This that low that will mark out on the 4 hours time frame, you can see it causing a good break of structures on the 1 hour time frame, giving you that here is a good point of interest for the sellers. So it's only telling you that since market is here, if price is able to reject from here to the upside, then your TP should be at this low. Wait for confirmations and you set to this low. Make sure price reject here multiple times. I've showed you guys why I'm analyzing. I've been showing you multiple confirmation patterns that you need to use at your key zones. So this is it on the 15 minutes time frame. You go down to your 15 minutes time frame. You see that on the 15 minutes time frame, this is the lowest point here. A price created, which prices are trying to make a break. And you notice this is the zone that we're waiting for a massive opportunity. You can see the massive selling here on the 15 minutes time frame. Imagine price come here and you sell massive again on the 15 minutes time frame. Or price breakout structures, you join the buyers back to that high. Price breakout structures, this is it. Price can only break out structures if this high is being broken. So price break structures, and then it's when you now be looking for an opportunity back to this particular height. This is how I join it on the lower time frame. But if you want to maintain the trend so that it will not be like the market is too long for you to wait, you can use the higher time frame so that it will not be too long for you to wait. See, 1 hour time frame will not be too long. 4 hours time frame will not be too long if you want to join the trend. But if you want to counter trend, if you want to join the lower time frame, then you should be looking for an opportunity. You can see the sellers are still selling massively. So until price come to your key zones, that is when you'll be doing what? You'll be following up. That's when you'll be following the market. Because sellers can sell here, break. You notice the next candlestick will be bullish, breaking out structures. You notice price coming back to this particular zone. I've seen it multiple times happen in the market. I've seen it multiple times happen in the market. So here you mark from the body to the wick. This okay, this doesn't have a body. The body doesn't have a wick. The body here. That's why price rejected it massively. Notice price tested it twice, one and two. That's why he is able to hold price rejections. And you notice price rejected here as well, one, two. That's why he is able to hold price. You notice price rejected one, and then the second time, this is the second rejections, two. That's why you need to be following the second confirmations. So I don't drag my line like this. Instead of dragging like this, I'll mark out the current high because I know that that high is a rejections to the past price. Like this now that you mark here, it's a rejection to past price. Okay, you can see it here clearly. So instead of me to come and be drawing this line like this, confusing myself, I'll mark out the recent high because price will come back to that recent high and continuously going back. I'll mark out the recent high, mark out this as well. So this is 75 index. If we go 75 1S index, let's see what 1S index what it's doing. 1S index, you can see 1S index giving us a clear structures to the upside, trying to give us something like a head and shoulder pattern here. Price trying to break this with the body, and then you notice at this low, price broke it, telling us that the sellers are in the market. And the price eventually come down to this low, but they didn't break it anymore. See it here. Came back down to this low, but couldn't break it anymore. This is when the buyers started buying aggressively. They bought what? They bought all the way to this high. It's a massive TP. Hope you guys are grabbing something here. You can use the link in my description. The link is in my description. My WhatsApp number is in my description. If you want to join my community as well, the link is in my description. So you notice this is the highest level price created. What's happened when price rejected this low twice? Where did it target? It targeted to the next high. That is why it immediately come to the next high, give you rejections. It dropped again. This high that created this low. Before price will start to push to this low, it must create an equal low before pushing here, because this is a higher time frame. So it requires pressure. It requires pressure on the buyers to be able to reach that zone. And how can this pressure be created? Through an equal low or an equal high, or head and shoulder pattern, for those of us familiar with the head and shoulder pattern. But an equal low must be created before price will get to this high. For my own strategy, equal low must be created. You can see the way price created low here. Immediately it smashed back to this particular high. So since it got to this high, it broke with a body. So now my next key zone, now I'll be marking out these highs to this body. See, this is the next key zone now. That price, if price is able to tap into this zone, you can see price trying to make a rejection. If price is able to tap into this zone, and then that will be a rejections back to this low. Because I'm still seeing this low. See it? I'm still seeing that low as a good zone. This daily time frame. This low have been tested twice. This is a low that pushed up to break this high. That's why price came back to this low. If you even see it, price tried to make a rejections, and then price changed instantly, creating this high on your daily time frame. So what I will do, I will drop down to the 4 hours time frame. Since I've marked it on the 4 hours on the daily time frame, I'll come back to the 4 hours time frame. I can now adjust this to these particular zones to make it more tighter. You can see on the daily time frame, it was here, it's consolidated on the 4 hours time frame. And when price broke out, it make a retracement here, gave us an engulfing candlestick, and it shoots massively. It's shooting up to where? Shooting all the way to this particular high, because this is a high that causes this impulsive move. So price will have to come back here. Then this is my point of interest where I'm looking for what? A selling opportunity, a buying opportunity. See, this is what I'm looking for. A selling opportunity, a buying opportunity. If I'm selling here, where will my TP be? At this low. If I'm buying here, where will my TP be? At this high. It's a massive swing if you can be able to hold trade. Then this is your 1 hour time frame. 1 hour time frame is being created. See, 1 hour time frame created this low swing. For those of us that are trading with 1 hour time frame, you can mark it. This low is the lowest swing that actually cause an impulsive move to take out this high, giving us this as a valid low. When broken, pam, straight down to this particular low. See the major zones where we are looking for an opportunity. So why you dey sell, why you dey buy? No say price never reach here, I'm never reach here. And where you're looking for a selling opportunity, buying opportunity is around here. If you want to join the buyers, it's around here for 1 hour, back to this high, or back to this high. You can be taking the trade because you are entering from middle. If you're entering from middle, don't take 12 risk reward ratio. Don't take 6 risk reward ratio. Take like 2 to 3 risk reward ratio, or aim the next high price created. This is the high, and you are out. Because price can come to this high and do what? And retrace back again, continuously going down, back to this low. You see it? So this is a low on the 4 hours time frame, on the 1 hour time frame, and this is a high on the 4 hours time frame. And this is your 15 minutes time frame. And this is your 15 minutes time frame. If you notice on the 15 minutes time frame, this is the lowest level, and this is the highest level that actually caused an impulsive move to break out, giving us this low, very valid. And this is the low on the 15 minutes time frame that actually caused what? A breakout, pushing all the way to this particular highs, giving us these highs as a valid, new valid high, new valid low, new valid high. So if this low is taken down to this low, respected back to this high, see it, respected back to this high. Why? You see the massive move, smashing out this recent high here. This is how you trade it on the lower time frame. Don't trade it from here. Let's say you enter from here and you are taking it here when the trade here haven't confirmed an equal high, and you're taking it to the next zone here. Take it to this zone that actually caused this impulsive move, and you are out. You wait for confirmation again. If it breaks it, you continue. If it returns back to this high, then you look for selling opportunity at this high again, because this is where the sellers are in. This is where they are always selling from. So if you are the kind of person that is always looking for a good move, you want to be joining good price, you want a swing, you want to join price, like you want to be trading, you want your stop loss to be a bit tighter, you should be trading from this top and lows that price are making. Confirmations, you enter, your stop loss will be a bit tighter. But if you trade at the middle, let's say I enter trade now, I see this red candlestick, I want to sell, boom. Because I know that price is coming here, I want to sell. Let me just cap it a little bit before price will get there. I will not cap it. Where will my stop loss be? I will not put it here or where. Then what will happen? Price will not do what? Turn, do like this, or go reach here, can't drop like this again, back here to people. Like, why did this thing smash me out? Because you did not wait. If you're waiting for your point of interest here, you need to wait. If you know, say, watching one candlestick, emotion no go gree make you wait, you know, if you wait, add more pairs to your distant chart. Analyze them. Anyone that is close to your zone, that's the one you'll be paying attention to, the observe. Anyone when they your zone, wait there for middle, you leave them until you come to your key zones, then you pay attention to them. You drop down. If you see it on your higher time frame, like your 4 hours time frame or your 1 hour time frame, you drop down to your lower time frame, like your 15 minutes time frame or your 30 minutes time frame. You take your entry. You take your entry. So this is it on the 15 minutes time frame. So I think I've dropped it from the higher time frame, 4 hours time, 24 hours time frame, down to the 15 minutes time frame. For those of us that are still taking 15 minutes time frame, So down to this 15 minutes time frame, I've dropped it because volatility is moving. So that is why I'm drafting it down to the 15 minutes time frame so that you can know your key points where you're actually looking for and opportunities. Know the different opportunity for middle of trade. If you want your stop loss to be a bit tighter, if you want to be entering sniper zones are not entered in the middle. Said to me sincerely, where you explain the market today, I feel go price Rolls Royce. I'm gonna go price, you sure? So that is it. You always look for your price what's at the low and at the highs. At the level, at the low, if you trade at the middle, I've traded multiple times and I've confirmed it. Anytime I enter trade from middle, I always ask myself, where will stop loss be? That is the first thing. If you discover your stop loss now, okay, let's say you enter trade at the middle and you have seen that this is an impulsive move, I actually take out this high now. And you notice this is the low that price need to come back to meet. And this is the high that price need to come back to meet. And price is at the middle. You don't know what the price is doing. First of all, what you do is to wait for price to give you a clear direction. How will he give you a clear directions? You see the way, okay, I never even talk that time about marker. Price don't they give you green candlestick, they go. So for that are following candlestick behavior. So you have to wait either side. If price drop here, then you know that yes, price want to reject back. It give you confirmations. You know that it's coming back here. They are giving you a clear. But if it's at the middle, you're not assured if it's coming here or here. It can come like this. At the middle, you can sell from here now. You notice price will come back from here. First of all, go test here for it to come back again to come and test here. I've seen it. I've even shown that example here while I was analyzing. The way price couldn't get to the low, it first go to the high, make an equal high. You know that price is actually coming to smash out this low. The next zone price is coming is here. If price is able to retrace, come back here, make it equal high, you know, send now straight down to this particular zones. Then you can take your 1 to 200 risk reward ratio. From here now, you drag it to this particular low. If you get the mind to hold trade, sit. If you not get mind, just dey take out this are the structural leads. The structural leads take it to this low. You exit. You wait for price again. You take out. There's a continuation of the sellers. You follow selling opportunity back to this low. Yeah. So that means all market are the same thing. All market are the same thing, no. Both synthetic, volatility, BTC. You can see the way I analyze it. Everything is just playing out. So all markets are the same thing. It's just for you to know your key zones, to know the valid zones that you're actually looking for. A opportunity, a buying opportunity, or a selling opportunity. At the high, at the low. Okay, look at it now. Price never they shoot up. Just first where they sell for middle. Price don't they give you loss already. Oh. So that's why you don't need to be trading at the middle. Come back here, then confirmations, boom, you know say your TP. You don't already get clue of your TP already. You don't already get clue of your TP already. So just wait for price to give you either directions. Come here, you know that price is rejecting here. Come back here, you know that price is coming back to this particular zones with a rejections. So the next thing we are going down to is have I thought have I done 15 days? Okay, this is 100 index. Let's see what 100 index is doing. Say say yes because all of them are still same strategy. Exactly. Market is just moving now. So you just have to understand the structures of the markets and then you play along with it. Say how your approach matters. So this concept now waiting say, okay, this TRSS trend reversals, so trending along with trend. So you have to be trending along with trend, following the trend. That's just the following what the trend is doing. On the 15 minutes time frame, you can notice this 24 hours time frame. 24 hours time frame, you see it's massive move. Where's your key zones? Yeah. Because why? These buyers are not, you see the aggressive move. This is where the seller started from, pushing down. And this is where the buyer started from, pushing up. And now if you go at price, they didn't come back here to this low. And it tapped here and started pushing up. So if we come back, if you continue like that, just a push, 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 reach here, push down, reach here, push down again. I'm gonna follow it back to this particular low because this is the low that actually caused this impulsive move. So if you got price break, if you got price break out of this high like this is a continuation of the sellers. Let me mark that. You notice price, but before price will have to make a break, it will have to then come back, test. It have to come back, test again here. If actually price is breaking out, then it have to come back, test, and then you notice back to this height. If it's breaking, it will have to give you a clue. It will break, and then it will leave a clue that it will come back to test. It will leave a low. It will come back to retest on. That will enable the continuation of the buyers. So this 24 hours time frame, I just marked out the key zones on the 24 hours time frame, making the market easier for me. Now I've known my key zones on my 24 hours time frame. What I will do, and this is the high that actually caused that impulsive move. That is why I marked it. So you notice this the trend price push up, and this is the high that price broke. This is the lowest level, and now I've determined it on the 4 hours, 24 hours time frame. I'll drop down to the 4 hours time frame. Now I've dropped down to my 4 hours time frame. This is it, impulsive move all the way to this particular highs. Price came there before it rejected. What happened? It tested it twice again, multiple times rejections, and you notice price pushed down. Price pushed down, and you see it's pushing up again and then pushing up, taking out structures. So here on the 4 hours time frame, we're having price pushing up because this is the recent low, and we're still having here as a very valid zone. We're still having it as a very valid zone. All these ones are just minor swings. All these ones are just minor swings, pullback. All these ones are just minor swing, pullback. The main zone is this lows that price created. So price is actually coming here. You can see it clearly, taking out these highs, telling you that it's trending all the way to these highs. And this 4 hours time frame, I'll go down to 1 hour time frame. Then 1 hour time frame, yeah, you notice this is an impulsive move. Price push all the way to this high and giving us this high, giving us this high. See, it's priced after that high, and that is rejections. And I'm having this zone as well. If price break this low on the 1 hour time frame, so if price break that low on the 1 hour time frame, we're having it to this zone. Actually caused this impulsive move. If price should break this zone, then we're having it back to this low, back to this particular low. Then this is confirmed as an equal high. If price should break this low, it will have to confirm here as an equal high. Then on this 1 hour time frame, if you go down to the 15 minutes time frame, see what the price is doing inside the day. You see it. Price came to this high and tried to make a break and came back inside this first engulfing. If this close like this second engulfing, then price is dropping all the way to this low. If this low is being broken, you notice the buyers that were massive here. The buyers were massive here, and then they bought all the way to this particular high. Marking here as a key zones, marking here as a key low, marking this low as your key low as well. So if price is able to take out this, you notice your TP will be coming here. This will be your TP target. should be your TP target. And yeah, so this is the lowest level that actually caused that impulsive move. So I'll bring it down like this. The one. Let me just use line to mark it out. So this is its prices. You can see each high is always a rejection to price. That's why if you're always looking for sniper entries, it's at your words, your key highs, your key lows, not these small swings. Your kilos are the ones that are always breaking structures. Key highs are the ones that are always breaking structures. So if a high is being respected, it's telling you that it's coming back to the next low that actually created that high. Same thing goes here. This high, why I marked out that low is because it caused an impulsive move to break this high. So if price is able to respect this and then figure out price coming down to this low, this 100 index, this 100 index. So what I'll do here, I'll just mark out this to this body. So what I'll do, I'll just mark out that to that body. There's an engulfing candlestick trying to print out there for the seller zone. And we're having, okay, I think step 100. Let me check out step 100. Let's see what step 100 have. Step 100, let's go down to 24 hours time frame. 24 hours time frame, refresh. You see 24 hours time frame. We're having this as the low that got smashed out by this move. That got smashed out by this move. So having this as the current low, which is being respected massively now, giving me an equal high here, an equal low. So this is a push up and 24 hours time frame. Let's see. 24 hours time frame is giving us these price broker structures. You notice price trying to make a retracement here. And when price came back here, you can see the evening star, sorry, the morning star, the big morning star it gave, see multiple rejections. It tried to give a fake out on the 4 hours time frame. And immediately it returned inside, breaking out structures again. It break out, price tried to make a consolidation here because this high now caused an impulsive move. Price tried to break out. This is now a fake out. So for those of us that we think that this is a breakout immediately and you start buying because price has broken out and giving you rejections, that's why you need to confirm, wait for full breakout. So price return back into the boss and then break out of the boss again. Immediately come back and this is a rejections. This is an engulfing candlestick. This is an engulfing candlestick. Two being printed at the key zones. And this is a break. This is a full break. This is a small break and this is a full break. This is a retracement. You can see a hammer being printed that shoots price all the way down to this next high that price created here. And then that is when price started selling down, giving us a new key high here on the 4 hours time frame. So giving us that highs, and then we're having now this low again on the 4 hours time frame. Let me see. Yeah, price is trending all the way. And this is the lowest level here. Okay, that is not the high. I think this is the high here. This is the high here. Or having this as the recent high price produced. Having this as the recent high price made. And then this is it, price break retest. And then for the second time, price is coming down. But to this particular one. So this is an equal low. If this is being confirmed, if price is actually going to retest, see the way price push up, come back again, second time, like the second time, give you a hammer, boom. Price always test your zone twice. Like here, if price is going up, it will still come back here again, test it twice. That I'm no longer going no to go. I'm no longer going no. Boom. Then you see it's coming back to this particular highs, breaking out. Then you see it to the next key zones. If you come back here, this is your selling zone. It must respect it twice again. If you come back here, you must respect it twice. Make sure you're always following the second one. Now, the second one, they make your stop loss tighter. The first one, if you tighten your stop loss on the first one, that will be first stop loss hit before price will start going to your directions. I know most of us have encountered that multiple times and many times. First stop loss hit before price start going to your directions. You entered with the first confirmations. You didn't have patience to wait for the second retest. See, so this is it for the step 100 index. This 4 hours time frame. I will drop down to my 1 hour time frame. So 1 hour time frame. Let me refresh the chart. Look at what the 1 hour time frame is doing. This, you notice, this is a zone. This is it. There is a high that caused an impulsive move to break out of this low. Look at it, to break out of this low. See, this is low that actually caused that impulsive move. Look at it. Price got to this low. What happened? Rejections multiple times, rejected. And when price broke it, it retested. Price broke it, it retested and pushed down. So for those of us trading, you will see this as a clean retest. You miss it out. And then you see price trying to make a return again. Is a multiple rejections on your 1 hour time frame, trying to make a return. So this market, I'm saying this to likely go bullish all the way. This is the high. I'm expecting it to come back. But before it will go bullish, like I told you, price will come back again multiple times. Respect this zone. Price will have to respect this zone on your 4 hours time frame like this. Come back here, test it again, and then continuously going. Okay, see that zone I marked out on your 4 hours time frame. On the 1 hour time frame, this is it breakout on the 4 hours time frame with a full body, and then this is a small retracement, and this is a small minor pullback. So I won't expect you should join this unless you are trading with the lower time frame, like your 15 minutes time frame ahead. That is when you can join this on your 15 minutes time frame. You can see the massive pullback on your 15 minutes time frame. Can see it here. Immediately price break. See it when price break. This is a first break. Price doing second. This is the main break here. Price retest on it. Look at the multiple rejections at that particular key zones. Price retested on it on your 15 minutes time frame, giving multiple rejections, and then before it started selling down with confirmations. If you miss out that, and then this is when price smash out the low again, another confirmation telling that the sellers are in the market. All you just have to do, you mark out this body again, and then you join the sellers again. But now, you have missed out this on 15 minutes time frame. This currently on 15 minutes time frame. Look at the zones I marked on the 15 minutes time frame. So now I'm having this high being broken. I'm having this high being broken, telling me that this is now a shift to the upside, that the buyers are trying to take control of the market. On the 15 minutes time frame, it's now giving me a shift to the upside, that the buyers are trying to take control in the market by taking out this. And now on the 4 hours time frame, it's telling me that price is likely to come back to this zone because this high is being taken out to retest. And we're having this high. What you have to do on your 15 minute time frame, you mark out this high as well. So if this high is not respected and you notice clean push again back to this high, you notice that this probably is when price might do that because this is a zone that got broken. This is a zone that might likely push the price down to this particular low. Because on the 4 hours time frame, it has printed that what price is likely to push up and to push down. This is the low. So to be in a safer zone, this is this high where you're looking for a selling opportunity. That's why I like using the higher time frame. The higher time frame will give me a very good clean highs. You see it going down to the lower time frame. You are not seeing on the lower time frame, this is it. On the lower time frame, this is a structure shift telling us to the upside. That price is heading to the upside. But before price will go to the upside, it will first come back on the 4 hours time frame, make an equal low. So if price did not come back, make an equal low, and eventually come back to these highs, then this is where I will now be looking for a massive selling opportunity. Then the selling, I'll have to sell it all the way down to this particular low that price didn't test. I have to sell it all the way to this particular low that price didn't test. So 15 minutes time frame on your 15 minutes time frame should be looking for should be very calm. Just mark out these highs. And then this is a breakout structures, a shift telling us that the buyers are trying to take control of the market. So you are now looking for a possible place you can join the buyers. So what you have to do is to mark out the key zones. This is your key high because this is the high that actually costs. This is the highest level now currently that price produced, and this is the lowest level that actually caused that impulsive move. See it, that actually caused that impulsive move. So I'm expecting price to come back to this low where it actually give us that impulsive move and continuously joining price again. But let's see if that is going to hold. Then if price should break out this high, there is a continuation. There is a continuation of the buyers. So waiting for price to drop at this one. This is the structure shift for the buyers, telling us that the buyers are now taking control of the markets. And we're having volatility, sorry, synthetic. Let's say 500. Let's look at what 500 is doing. See, it means that as a buyer or seller, you must allow the market or liquidity to reject it twice before putting entry. Yes, now you need to confirm what you are entering. You need to confirm where you put your money now. At least before you put your money on something, you need to confirm that that trade that you're putting your money. So in order to confirm it, it's a must that it need to come back there for the second time. And you have been seeing multiple times, you have been seeing the way I've been analyzing, and I'll be showing you twice, multiple times, price have been coming to a key zones, testing it twice before rejecting, testing that zone twice. So then it must test twice. So once it tests twice, it's already giving you a good confirmation that price is going to the next high. Like now, see this is an impulsive move that started this, created this low. So if price is able to come back to this low first, you know that this is your TP target. It's have already given you a TP target. So when you don't get TP target, wetin go come remain? Your stop loss target. Where is your stop loss target? Now your entry, where you're entering from. So that your entry now will determine wait for second hit. I know patient is what we are lacking, but before you invest your money, you guys look, check, confirm am properly. Then you invest your money so that even though it goes against you, know that you flow along with your structures. You flow along with your setup. But before it goes against you, you know that you didn't, if it goes against you, you know that you didn't wait. You were not patient because once I've showed you multiple times, if an equal high price retest a zone twice and reject, then your TP is the next zone. They've already confirmed. Unless you didn't enter it well or you entered with emotion, you didn't confirm it well before you entered. Before you join the press. I'm coming. Let me bring my charger plugged. Let me plug on. Okay, I'm coming.